most people don't notice it yet, but a couple of years from now, we'll look back and say that was the beginning. This year, especially, was the beginning of a new era or a new time in precious metals.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and apparently it must be Silver Tuesday because, as you can see, I have my good friend James Anderson from Silver Doctors and SD Bullion over there. Site with a great news feed, a lot of great interviews that James does. Also, you can buy bullion there, get some good pricing. So at the end, James hopefully will be kind enough to let us know how to reach him. Before we get started, just go ahead and hit that subscribe button so that as the Federal Reserve does its ultimate best to melt down the dollar as quickly as possible, you can stay posted on the insanity and how these things are going. And to dig into a little further, again, James, appreciate you joining me. And how's everything going with you today, my friend?
It's going well, Chris. Just in the pre-interview, we discussed at the last moment, we talked about just the bullion bull market that's kind of, I think that's happening, that's underway. I really feel like, most people don't notice it yet, but a couple of years from now, we'll look back and say that was the beginning. This year, especially, it was the beginning of a new era or a new time in precious metals. So I'm feeling confident in the years to come.
Well, it's interesting you mentioned that because I think it was yesterday I was talking to someone and mentioning that 10 or 20 years from now, will perhaps people look back at these repo lines, and now that the Fed is purchasing short-term Treasury bills as maybe a turning point. So perhaps to start, what is your take on this? I mean, I know, don't call it QE. It has the same net effect of increasing the balance sheet. So what's your take on all of that?
Well, the timing is good because this is leading into, I think, just think back to QE1, QE2, and how precious metals reacted to those events. And so my hunch is QE4. QE3 was obviously not good for precious metals. Precious metals have not done well. They did not do well under QE3. But this QE4, where it starts to show and reflect the fact that the Federal Reserve ultimately is probably going to have to double their balance sheet in the coming years. Right now, I think the balance sheet's around $4 trillion. And I know it sounds glib to say that. $4 trillion it's at right now. Bernanke would tell us, it's no problem. I can liquidate that in like a matter of minutes. And here we are years later, and that's not true. It took them forever to even down it, quantitative tightening, $700 billion. And that all of a sudden exploded the financial market. Like at the end of December 2018, the financial market was under huge duress, so much so that Mnuchin had to come out on Twitter while he was on vacation down in Mexico and tell I called everyone at the banks, it's all good, no sweat. And lo and behold, Q1 2019 was great for stock investors. So there's a lot going on under the scenes we're not going to know about until it's like 5 or 10 years later. If we ever have another partial audit of the Federal Reserve, we're going to learn crazier things than we even can guess right now. Remember the partial audit that happened in 2011 in the Federal Reserve? They went and looked, and it started with that TARP fund, and $700 billion was the number they said. It's no big deal, Well, that when they went and did the partial audit, they actually did the accounting for it. It ended up being $29 trillion. That's a lot bigger than $700 billion. So, I think what we're seeing right now on the Fed charts and in the New York repo operations and stuff, I think that's just a minuscule part of what's really happening. I think, we're talking it's something that's probably 10 times, 20 times. If you look back at what they did in 2008, they did roughly 30 times what they were saying. It's probably happening around the same number right now. We just don't know it. Probably know about it maybe 5 years from now. But I don't know. This is exactly why I feel very, very confident that precious metals will do well, because ultimately they're doing this crazy balancing act where they have to try and support the financial markets because they've levered out the economy so bad that if the financial markets were to implode, then baby boomers would lose all their retirement savings, et cetera, and it's just this nasty chain reaction and vicious cycle downward. So they have to keep it propped up somehow, some way, while also magically devaluing the dollar and telling you there's no inflation. And that's, I think, what they're going to keep doing. And so, we're going to have to live through that, and it's going to be difficult because it's just more of the same, more of this this stuff where you have like psychological trauma, where people tell you things that aren't real, that aren't true, and you have to go and do critical thinking yourself and figure out what's really going on. And it's difficult, and it's a lot of work, and it's annoying to have to live in a society that's just so full of lies. We can't just be honest with each other and tell us the situation where we are. The situation where we are is we got to prop the financial markets up, and we got to value the debts we've accumulated via the currency. Probably that's basically where we're going.
Yeah, James, a lot of great points you mentioned in there. One of which where you have Mnuchin, Jerome Powell, Donald Trump telling everyone, hey, the economy's strong, everything is good, which it's like on one hand, the audacity to say that when simultaneously there's clearly a problem here. Things are great, all right, maybe the economy's good, but the banking system's fragile. Well, that's a big part of the economy at this point. As these numbers, they appear to be getting bigger. I've heard various analysts, a couple articles I was reading yesterday saying that the problem is not getting better and we keep tacking things on here. Do you imagine this is going to continue to escalate?
Yeah, I do. I think Mervyn King had a article. There was an article in Guardian about Mervyn King. He's like this central bank, guru name, and he's out there talking about, basically giving out, warning flags that the debt jubilee is likely where this all leads. So this idea of doubling the Federal Reserve's balance sheet as we lead into this decade coming up, and then eventually everyone coming to terms with, yeah, we're going to have to write down some of these debts that can't be paid off. There's going to have to be bankruptcies. A lot of these corporations that are triple B rated are going to have to be, moved to junk status, essentially. There's going to be a lot of stuff that's going to happen in the next coming years, I would imagine. And so, yeah, taking it to the next level, I think is likely what's going to happen in terms of changing the monetary system, changing of the guard, the U.S. dollar not being the sole reserve currency, there being a new mechanism perhaps that the world uses. My hunch is that's coming, but it's going to be a little bit. I mean, we've all been waiting for this for a long time, and the one thing that I've learned in the last 10 years is that it takes longer than a lot of people. And bide your time and be patient, because this is a long game, and we're talking about the global economy here. It's a lot of big parts, moving parts that are happening, and it's kind of like the Titanic.
Right, and you mentioned patience, which is certainly a valuable concept for precious metals investors. So along those lines, we hear, hey, this guy was a longtime bull, just couldn't take it anymore, threw in the towel. So certainly it's not the easiest of times, because it really requires, in my opinion, to have some real conviction in your trade. Although what's helped me, and you touched on a little bit a minute ago, and perhaps could expand on where you said the Fed has this tricky balancing act where it's like you don't want rates to get too high because then the debt goes bad. Someone owns all these mortgage bonds, all this toxic debt. Yet if you print money, then you have the inflation of the dollar. And I've felt for a while that it's kind of past the point of no return. Maybe they delay it, or they come up with quantitative easing or tiddlywinks or whatever they call the next one. But is it, for all intents and purposes, past that point of no return in one form or another?
Yeah, I think so. I think the idea that we're going to be the sole reserve currency in the next 40 years, next 50 years, like we've been for the last 40 or 50 years, is crazy. That's I think the idea that things are going to continue on as they have been for the last 50 years there was a huge change in 2008, and I think that was the line in the sand where we papered it over and have lied to ourselves since, with all types of nominal price escalations in stocks and all the various things that have happened since. But that was a very telling point of the economy, and the fact is we didn't deal with it then. We didn't fully go through the cleansing that was required. And by not doing that, it's only gotten larger. And so this next time, it's just going to be a bigger affair. And I think it's coming. It's just a question of exactly when, obviously. But ultimately, I think Greg Weldon, who I spoke with last week, is right in the nearer coming year to two, that the U.S. dollar is going to be losing some purchasing power, or at least some power versus other competing fiat currencies. So my hunch is they're going to start loosening the strength of the dollar. And I know there's been a lot of people out there who said that we're going to go through some crazy mid-80s US dollar bull market where the dollar is going to gain 40-50% against emerging market currencies. It's already gained a huge amount against emerging market currencies. And my guess is, he's probably right, is that we're probably going to see that going down in purchasing power versus the stock market, which I don't believe the stock market's going to have a situation like 2008 where it's going to go down like in a waterfall decline. I think the Fed will come in and intervene, just like they did at the end of 2018. You had Mnuchin calling up all the head of banks over like a 10% drop, like freaking out because he knows that it's all air underneath there. There's huge air pockets. And so my guess is they'll prop the stock market up, but they'll let the dollar recede a little bit in the coming years. And that's I think where the next leg goes. And once we hit $1,900 gold and get beyond it in 2000, that's when it really gets stupid. That's when, that's when the stupid people come in and buy it because Bloomberg's telling them that gold is a hot commodity, et cetera, et cetera. And people who understand the fundamentals right now are buying it hand over fist. But it's when the hot money comes in around $2,000 or up. That's when you'll see this start getting a little bit nuttier.
And speaking of which, I mean, well, maybe it's not QE4, whatever it is called, we'll probably have another rate cut coming in about a week and a half. I guess, what do you think does it take to get gold back to 1900, to have silver back in the $50 range? Again, maybe it's overgeneralizing to say, here's the money supply, it goes up, that means gold has to go up. It doesn't, but you would think as the dollars are being increased, there's folks like you and I and people watching the show who are actually out buying it. And as we talked about last time, I mean, your Fed balance sheet is well in excess of 2012, 2011. And it's like we've seen QE4, which you thought move these metals a little bit. So far has not been the case. So what do you think is going to take to actually see the rest of the world act on this and move those prices towards their all-time highs?
All right, so we're still thinking with US dollar glasses on right now. Remember that we're only 1/20th of the world, okay? So 19/20ths of the world, a lot of them have record high prices already in gold, and they're buying gold very, very, very aggressively. Like I was looking in, for instance, before this interview, you were asking a little bit me about, US Mint sales and how that compares with, my experience in the industry. And I can go into that later, but the most important thing about this point is that I looked at the Perth Mint sales charts, and Australia's Perth Mint, and they make great coins, by the way, great bullion coins. A lot of stackers love those coins, but their sales numbers right now are higher than new sales for US Mint products. And Australia is 1/10 the size population of the United States. So this is essentially this is reiterating the point, is that Australia has record high gold prices right now. Their silver prices aren't even, I had to look at the chart, but they're probably just beyond halfway where they were in 2011. So you have Australians running in and buying, gold at record high prices, and they're doing it aggressively. And they're also buying silver because they probably see value there. And over in the US, you have a lot of secondary product. People are selling it, quitting. And then the new products aren't being sold that well because people just buy the secondary products for lower price. So it just shows you that this weird phase that we're in right now, where people in the US still don't get it. But I think people in emerging markets have gotten it, especially in the last few years with the US dollar strength. A lot of those countries are coming apart at the currencies. In Canada, the euro was at a record high recently. The British pound, Japanese yen was close. There's a whole bunch. The only thing that's hanging in there is like the Chinese yuan, and that's a rigged fiat currency as it is, as we all know. So I think it's ultimately the dollar. That's the dollar and the stock market. Those are the two. And I think the dollar is the first thing that probably does give way. And then eventually the stock market starts giving way as the baby boomers sell off their shares to use in their retirement. I guess, the idea is that young people are going to be buying these shares from them, but I'm not super convinced that there'll be as much value as they are today. I think 5-10 years from now, we may end up going through a bear market in stock markets that's going to be similar to 1968 to 1980. We may see something like that where, nominally it goes down or goes sideways for a long time. And then when the decade's all said and done, you look back and the value of it's just a lot less.
Right. You touched on a little bit gold and silver there. Obviously, we have the gold to silver ratio is still in the mid 80s, I believe, last time I checked.
Yeah.
Yet, here anecdotally, Eric Sprott mentioned something on one of his talks with Craig Hemke. I think he was saying they were getting about 6-to-1 ratio. So for $600 of gold, $100 of silver. I've heard some bullion dealers report as low as 1-to-1, which I've been wondering. Again, there's the ratio, which maybe I think it should be this or that, which is irrelevant. Yet if it's priced at 85-to-1, and people are actually buying at 1-to-1 or 6-to-1, is that something that is what could actually force the ratio to move one way or another at some point?
Yeah, that matters when the aggressive bullish bullion buyer is winning in terms of price discovery. So like from 2010 to 2011, specifically on the COMEX, when those guys who are going long keep bidding up the price. Essentially, we had the same thing happening in the real physical market, in the wholesale and retail market. There were months that went by where we had more silver sales than gold sales, even in 2010, 2011. Because the silver story is obviously so bullish, especially as the price is going up, people just get aggressive. And so, that you see that tightening happen when the price is, the price war on the COMEX is being won by the longs. Obviously, that's not been the case for a while now, but I think that we're going to start seeing that again in the coming decade. The idea that it could go on a 1-to-1 basis in the retail wholesale market, when you add up like the Gold Eagle, the Perth Mint coins, all that stuff, it ends up being like on silver when it's at its biggest levels. When you add India into it, it's been a fourth, I believe, of all the supply in 1 year, which is huge. That's a large amount of silver for just investment purposes. But right now, I think we're trending in the teens, just thanks to India keeping us alive, because the Western world is barely buying as much as they should be. Maybe in Australia they are, but in the United States, we have a lot of people throwing in the towel because they probably don't even know why they bought it in the first place, or they didn't have the patience to kind of wait it out. So we're in the United States, a very small market. I don't think people realize. We're huge in silver, we are, but in gold, we're very tiny in terms of overall scope and size. But it's common, I think, for bullion dealers. I've been in this industry over 10 years. When you talk to older people who are buying, especially for the first time, they definitely want to lean into gold because it's just not as volatile and they don't have as much time on this earth to wait it out. And then the younger people tend to be aggressive on silver because they have decades. They believe they can wait this out and wait for the next spike in silver to maybe sell off some or just to pass it on to their heirs, etc.
I hope I am not waiting more decades for.
No. I'm telling you that this next decade will be good for silver. I'm damn confident.
Give me some good news here.
Yeah, no. I think we're good. I think next year we're going into the 20s, and it'll be buoyant. I think next year.
So that was part 1 of my interview with James. Check back tomorrow for part 2, where he talks about what he's seen from a sales volume perspective in terms of gold and silver sales during the last couple months when the market was rallying, and also whether China and Russia are aware that the U.S. banks are suppressing the gold and silver price and how they might be seeing that. So hit the subscribe button so that you can know as soon as that is posted, and it'll be up there tomorrow.